Well, according to key insights from a trusted voice in the Pi community, at Dr_PiCoin, that's exactly what may be happening right now. And if you're holding Pi or thinking about entering, what's coming next could reshape your entire strategy. Welcome back to TJ Crypto World, the channel that doesn't just follow trends, we break them down and get you ahead of the curve with deep dive analysis, technicals, market psychology, and insider level signals. Today's episode is, because we're exploring how global stability and Pi coin's tightening supply could fuel a significant reversal. You're about to find out why geopolitical calm is bullish for crypto, what's changing with Pi's supply this August, the smart way top users are accumulating Pi, and what PiNetwork really needs to finally launch its moon mission. So stay with me till the end, because I'll give you my personal outlook and key price levels that matter right now. Midway through, hit that like button and subscribe if you haven't already, so you never miss a move in Pi, XRP, Kaspa, or Sidra. Let's go. Ceasefire signals stability, why Pi could benefit. One of the major geopolitical shifts in the past few weeks has been the ceasefire agreement between Israel and Iran. Now, why should this matter to crypto, let alone PiNetwork? The answer: risk appetite. Historically, periods of geopolitical calm tend to lift sentiment in high-risk markets, including stocks and crypto. Traders feel more confident deploying capital. Investors stop panic selling. And money starts flowing back into projects that looked risky during volatile times, like Pi. According to Dr_PiCoin, this stability is already working in Pi's favor. The token has been hovering dangerously close to its multi-month low near 40 cents. But with external fear declining, the chances of a breakdown are fading. Instead, we could see sideways consolidation and eventual recovery, especially with what's coming in August. Pi supply reduction. August could be a turning point. Let's talk tokenomics. At Dr_PiCoin's recent report highlights something very important. Starting in late August, the rate at which Pi is unlocked and released into circulation will slow down significantly. Now that's big. Why? Because every market, whether it's gold, oil, or Pi, runs on supply and demand. When supply tightens and demand even just stays the same, price has a tendency to go up. So here's what this means: Pi will become harder to accumulate, whales and early adopters will stop getting constant fresh emissions. Scarcity will return to the ecosystem. This could be the fuel that pushes Pi back above key resistance levels, especially if it aligns with renewed user interest, developer activity, or real-world adoption. Why the current dip might be a buying window. Despite the optimism, Pi hasn't exactly been mooning. Trading in the $0.50s, down over 80% from its all-time high of $2.98. But what are savvy Pi supporters doing right now? They're not panic selling. They're accumulating. Here's how DCA works: you invest a fixed amount on a schedule, regardless of price. When prices are low, you get more coins. When prices are high, you get fewer. Over time, this smooths out your cost basis and reduces risk. Especially in a project like Pi, where the long-term value isn't just in the price chart but in the ecosystem potential, DCA helps you stay disciplined and avoid emotional trades. What Pi still needs to succeed long-term? Let's be clear, macro trends and tokenomics can help, but they're not enough. Pi's success will depend on what happens inside the network. Will we see real-world apps and dApps launched on the Pi blockchain? Can the core team improve transparency and increase developer engagement? Will the user base convert from passive miners to active economic participants? These are the levers that can turn Pi from a speculative bet into a real utility-driven asset. And June through August could bring big announcements. Could Pi mirror Bitcoin's path? Or carve its own? We've seen this story before, Bitcoin having events that reduce block rewards, Ethereum moving to proof of stake with deflationary supply. Both saw massive price shifts when supply pressure eased and adoption expanded. Could Pi follow the same trajectory? Maybe. But Pi has one thing that BTC and ETH didn't: a massive community before it even launched to the public. If it can activate even a fraction of its 47+ million users, Pi could explode, not from hype, but from real usage. Key levels to watch: here's what I'm watching now. Support, 52 cents is the current floor. If that breaks, 48 cents could be tested again. Resistance, 58 cents and 60 cents are key hurdles. If Pi clears these, we could retest 70 cents soon. Keep an eye on MACD golden crosses and RSI overbought/oversold zones for entries or exits. We'll keep tracking those here. If you're still with me, you're clearly a pioneer who's serious about building smart positions. So go ahead and hit that like button, subscribe to TJ Crypto World, and comment below. Do you believe Pi supply cut plus geopolitical peace could mark a turning point? Still too early to tell? Thanks for watching another deep dive here on TJ Crypto World. Whether you're dollar cost averaging, watching from the sidelines, or just learning, remember this: crypto is about timing, strategy, and conviction, and PiNetwork might just be writing its next chapter in front of our eyes. Want to know more about Pi's June 28th event? Or our analysis of XRP, Sidra, and Caspa? Check out my other videos for the full story. Until next time, stay sharp, stay ethical, and stay ahead of the chain.